such a fantastic guest. And Navid, thank you so much for coming by and stopping to Palatize. It's such a pleasure having you here. And we're super excited on understanding and learning about everything that you do as a serial entrepreneur and with so much knowledge on the e-commerce industry. This is the type of guest that we feel proud of having here at Palatize.
Thank you very much, Maxi. It's great to be here, and you have an unbelievable facility, and it's very impressive. And I'll be glad to tell my story and help any other sellers here and to be able to succeed in this industry as much as possible.
Of course, Nadav. And first of all, I know that you've been here in the States for more than 2 years now, and you have had so much success starting so many years back as an Amazon seller, correct? So you have a lot of experience in everything that has to do with e-commerce. How did you get into this business, and where did you used to come from in terms of businesses?
Yes, so I was an entrepreneur most of my life. I come from the high-tech industry, actually. I was a computer programmer. My first company was a network service company. We did cloud services around the world, and that was about 15 years. And in 2015, I sold that company and was looking what to do next. And a friend of mine said, hey, you gotta try this Amazon course, and went into did that course just like everybody else. Brought my first product into Amazon. It was a bouncing reindeer that I brought in September, and I was living in Israel. Brought 3,000 units, and immediately it started selling 5 units, 10 units. It was great. And then Black Friday came. I went to sleep, woke up in the morning, 800 units sold. I was blown away. And then Cyber Monday, the rest of my 1,200 units were gone again. So I understood the power of the US, 400 million sellers on Amazon, buyers I mean. So, and since then I've created probably about 7 different brands. I still have 4 brands of my own, and been selling for over 10 years. And we started Capec about 3 years ago because I felt there was a missing finance solution for sellers. I mean, us sellers growing our businesses, it's very hard. It's always a matter of bringing inventory, getting more inventory, and that's always the biggest problem. And there just weren't any great solutions out there, and we created this from something.
Well, and obviously you being a seller yourself, obviously that experience had to add a lot of seeing what's broken on the system, how we can provide a better experience to sellers as yourself in order to keep scaling your business. So what was broken? What was your main goal to fix with Capec, and how did you try to solve that bridge, you know, between the sellers and actually getting some kind of partnership or finance help in order to keep scaling their business?
Right. So as I grew in the industry in those 10 years, basically most of the sellers that I met would always come to me, would you invest in me? Would you give me money? Would you invest in my brand? And 90% of the time, the investment was to buy inventory. Now, if you're a seller and if you're an entrepreneur, and especially in the e-com space, you understand that if you have $100,000 and I give you $100,000 to buy inventory, that's basically going to last 6 months, because next 6 months you're going to need $200,000 and then 400,000. And if every time you give up equity just to get that money for inventory, you're going to finish without any shares in your company by the time you're a $5 million seller. So that was one thing. I don't believe in having to give equity for inventory. Inventory is a product, it has value, it's a good collateral. You should not have to give equity for that. But on the other side, there aren't a lot of finance solutions for this industry. I mean, this industry exploded during COVID. Before that, it was a little more stable. But in many cases, sellers, they could be sitting anywhere in the world, selling in different marketplaces around the world, and they don't always have banking relationships. They're not a brick and mortar. Banks don't like these type of businesses.
They don't like it.
Exactly.
They won't touch it. And what you said, it goes straight to what I wanted to touch with you in terms of this cash flow trap that e-sellers constantly see and leaving their equity behind because they want to get more products. So basically with you guys, do they need do sellers, they need to give any equity, or how does the whole process work in simple terms? I mean, how's an e-seller that's watching us right now, what can they expect from a company like Capac in the industry in order to get this type of partnership and grow and scale their business?
Yeah, so obviously I didn't come from the finance world, came from the e-commerce space world, and we look at our sellers as partners, as investors in our partners, and we don't take any equity. Our product is here to try and, for one, give you the financing you need to buy as much inventory as you need, and two, create steady and stable cash flow, because as an e-com seller, the biggest problem is cash flow. Every time you got to place an order of inventory for 6 months or 3 months or even more, then you have peaks of money that you have to 30% down to your manufacturer, then the rest a month and a half later, then it takes another month and a half to get it into Amazon and start selling, and only then 3 to 6 months to sell it off. So your ROI when you buy inventory is usually anywhere between 6 to 9 months. Yep. So it's a very relatively long ROI, and it's not stable. You need a lot of money when you first buy the inventory, and then you don't get anything for a while, and then you start getting it back as you sell it. So the cash flow isn't stable, and therefore any finance out there, even if it's a term loan, you went to the bank, they gave you a loan with 9, 10 months payments or 12-month payments. If you, from the day you placed your order until you started selling, it's 4 months, you already paid a third of the loan back. Sure. So you didn't even get to use that money, or if you didn't plan right, you don't have that money to pay it back, because
at the end of the day, it's still already in Amazon warehouses, and it's ready to sell and start selling, and you need to get more inventory down there.
Right, and then in the middle you have to make another order, and in most cases it's double the amount that you already did, because hopefully you're growing. So we help in the fact that, one, we partner with our sellers, we can finance up to 75% of all the purchases, we don't take any equity, we don't take any personal guarantee, we don't do credit checks, we don't take business liens, we take only the inventory as a collateral. We basically partner with our sellers on buying that inventory. After we take all our know-how that we check your product, check your sales, check your profitability, so you're also getting an audit. We come back to our sellers, we tell them if their advertising costs are too high, or if their shipping costs are too high, and if their product isn't making money, then obviously we can't finance it, and we explain it to them and help them grow.
So you do provide some kind of assessment in terms of what they're buying, how much are they buying it for, their margins, these type of things. You get actually in their business and try to provide some consulting in terms of, hey, this is not going to work, we're not going to be able to provide you this if the buying price is this or X.
Right.
So you get very
much involved. We take all the know-how that I've accumulated in 10 years, and we drill down to every little bits and bytes of the profitability of the product, whether it's the reviews, the entire category, the competitors, the cost of advertising, the landed costs, return rate, everything. We check everything, and only after we check everything we'll come back, and if we approve you, then basically then you're set, because then we'll pay for the goods at any time they need to be paid.
Okay.
And you only pay it back as you sell the product. So you don't have any cash flow problems.
Okay.
And as long as you're growing, we'll be able to grow with you. So you'll be able to grow almost as much as you need.
And how does that funding occurs once, obviously, you get approved? Do you get that money yourself, or are you going to pay directly to the provider? Or how does that whole strategy starts working out in terms of buying the goods and making sure that those goods are shipped on time or whenever you guys need it?
Right. So we pay directly to the manufacturer, and we give our best practices when it comes to managing chain of logistics. So we insist on post-production inspection. We check that you're shipping with insurance. And after all this, we'll pay the manufacturer when it's ready. So this also means we have 100% efficiency of funds, because if your manufacturing got postponed by a month, doesn't matter. You don't have a term loan that you're paying back or paying interest. We didn't even pay at the manufacturer. On the other hand, if you have terms with your manufacturer, you pay maybe 30% when it's ready, 30% when it arrives to the US, and 30% 30 days after that. We'll connect exactly to that, and then the return will be much less when you start selling the product. The fees will be less, everything will be efficient.
Okay, and are those terms set prior to you start selling the product? So what happens if a product sells lower than what you guys expected? Or, I mean, are you going to start collecting like a kind of a percentage in interest if they go longer than expected? Or, I mean, it's just a fixed fee?
So from our experience, we've noticed it's much easier for sellers to manage their cash flow when they do have a fixed fee and a fixed schedule of the return, but we built it according to anticipated sales rate. So if on average you're selling 2,000 units a month and you bought 5,000 units, we'll do 5 payments to match it. But if you sold faster, we'll even insist on you paying back faster, because basically there's no inventory and that's our collateral. And then we'll give you fees back. And if you sell slower, then we can always spread it out a bit more, add a little fees. We're always very involved with the sellers and what's happening. I mean, even we've had sellers, a container got stuck in customs for 3 months until, you know, he got it released. We don't insist on him paying us yet or anything like that. Okay. Obviously, there'd be some added fees to this, but we're helping him to get the container released. We help him sell it off. We had a seller that had a hijacker and got his whole store shut down because of that. So we're selling his product on his listings through our stores. So his sales rate continues, his ranking stays, and we help him open his store while we're doing this. So we're true partners and we understand the business.
That's what I'm looking at. I mean, this is a true partnership. You guys get involved all the way, all the process.
Exactly.
And that's fantastic. That's not easy to find.
Yeah, and that's the difference. That's the solution that I felt was missing, because anyone in the finance world, if you take financing from any other business, even if it's unsecured, at the end of the day, the second you miss a payment, they're going to come and foreclose. They're going to try and take everything they can, close your store, close their, you know, things happen on Amazon. We live this business so long, I've seen it all, you know, listing gets shut down, stores get shut down, hijackers join your listing, stuff like that. We understand it. We don't just come and try and destroy the store or ruin the business. We try to help save it, because then we can grow together.
That's fantastic. And usually, Nadav, what kind of requirements or what do you see in brands that you want to partner up with them? I mean, how do you start scouting them, or is it the other way around? I mean, what would you say is a perfect match for a company like you guys?
So we like, obviously, we like brands, private label, not resellers, because we believe in businesses that are being built for the long term. And obviously we need to see some sales rate. So therefore, a store that's been working for at least a year, product that's been selling for 6 months, so we have the sales history to see the growth. And I think that's where we're really needed, because once you start selling 6 figures, high 6 figures, or low 7 figures, and you want to scale, that's when you need a lot of money. And it's very hard as a private entrepreneur to get those funds, so that's where we're here for. And then you can grow to 10 million, 20 million, basically unlimited in that way.
I guess that you guys get involved also in terms of getting into their books, deep dive into P&Ls, balance sheets, obviously their Shopify or Amazon accounts. Do you guys have any minimums in terms of finances that you guys provide?
So actually in that way we're a little bit different. We don't go into your balance sheet. We don't look at your finances. The only thing we look at is the true sales of that specific product. Amazing. And the profitability, because we have the confidence that if we paid for it, it's going to sell, and if it doesn't sell, we know how to sell it ourselves and help the seller get rid of that product or get it sold. So therefore, we're confident, even if you're doing other businesses or what's happening in your business is not exactly relevant to the specific PO and inventory we're buying together. So it's much simpler in that. But basically, obviously, we don't do perishable goods because they have a short shelf life, and if something goes wrong, we don't have time to save the product and the financing. But all the rest is basically very simple.
And this whole process, since, obviously an entrepreneur, they need to get that new PO. We don't want to get into details of getting a new PO right now in China or, with the whole situation that we're living right now. But if an entrepreneur that they have their business, they want to scale it, and it comes to their Instagram and they see, okay, Capek, how long does the whole process take since they approach you guys on day number 1 till they can get approved and they get they can get their product actually funded?
So the approval process is very fast. Once you connect if you have your information, if you connect your API and you bring us your PO, then usually within maximum 48 hours you can have an offer.
Okay.
If you approve it, within a day or 2 it can be funded.
No way, that fast?
That fast. We've even had, if it's recurring customers who understand the process and already come with the documentation ready, we've even had same day or next day funding.
Wow, that's amazing. Do you guys have any component of AI involved in the approval process, or do you guys have your own professional agents?
No, of course. We have through our API, we have an Amazon application that's approved on Amazon. Once you connect, we pull all the data, and of course, everything that I talked about, all the checks we do, it's all automated and data analytical automated. So
amazing. And once you start financing, do you finance the whole PO, or do you go after certain SKUs that have been moving more, or how does that whole process in terms of variety of products? I mean, do you finance a particular product from the brand, or do you finance the whole PO? How does that work, and how does it work on different industries?
Yeah, so we're financing specific products and their sales history. I mean, if a product is selling 1,000 a month, then we can finance up to 6 months. We don't believe you should buy more than 6 months, 6,000 units. But if you have a product now that in your book of, in your PO, you have, let's say, your 2 main products, they're selling thousands a month, but then you have another 15 products that are still selling very slowly or just growing.
Okay.
Then we'll finance them a little less. We'll finance maybe 20% or 30% and not 70%. But to make it simple, we'll still finance the whole PO instead of 70%, maybe 60%.
Okay, so you make it a lot simpler. You adjust to their needs and try to help them at the end of the day, spreading the whole, getting the whole PO
finance. Yeah. We try to keep it simple. We don't want to start splitting up the POs or anything like that. You have a PO from your supplier, we'll make sure to pay it, and it might just be it might not always be the full 75%.
Of course.
Sometimes it might be 50, 60, but we like anyone who we see has a good business and a potential business, and that's what we're looking for. We'll always finance something, even if he's just starting. He has a product and he's still in a launch phase, so he's not making money. He's at 5% profitability. So we'll still finance 20% of the PO or 30% of the PO, so that we can grow with him. He'll have some help, and as he improves and we'll give him the feedback, improve your PPC, raise your costs maybe, get more profitability, and the next PO will finance 70%.
Oh, okay, that's amazing. I mean, obviously, at the end of it, as you have said since the beginning, this is a real partnership.
Right.
So obviously, it's in your interest that those slow movers or little movers of those products, they start moving more, so you can actually help them more to scale their business, which is fantastic. Question, you've seen it all in terms of Amazon. What kind of industries or type of products would you say that you guys focus more or are a better match? Are you across the board, or I mean, what do you say it's the products that you can deal with, in a
I
more
think
common
we
way?
are across the board. Every niche and every category has its advantages and disadvantages, and also it's amazing to see creative sellers even take a hard, very competitive category and bring their different look or different angle on a product, and suddenly it booms and it's a huge success. So we believe in all of it. We don't have any problem financing any of these type of categories, and we love to see that.
Amazing. And obviously, once you, because at the end of the day, your collateral is going to be the inventory.
Right.
If that inventory is, let's say, with Amazon, as a custodian of the inventory, what happens if, God forbid, things they don't go as planned? I mean, what would be a route for you? Do you guys take possession of that product actually?
Yes, so obviously if that happens, we take possession of the product, and as part of our contract we have a lien and the rights on the trademark to sell that product.
Okay.
And then we sell it through our listings, so that, and even if we sell it, we always do this with hopefully with our customers together. If something happened or they disappeared, then we do it one-sided. But obviously whatever we're able to get out of it, we either return the funding, and whatever's left we'll give the customer. I mean,
of course,
we're not looking to profit on any of these situations.
Makes sense.
And luckily, I mean, 99% of the times, if the seller is communicating with us and participating with us, we'll help them get out of every situation. I mean, obviously things happen, and we've been through it a million times, and we're here to help. We're not here to destroy the business.
Yeah.
If we finance the business, obviously this business is good and has potential,
Yep.
and there's no reason why it should fail. If something went wrong along the way, we'll help you fix it.
And you said something that's key in every industry and every relationship between partners: communication. I do believe as well that communication is key between developing this type of partnerships, not only with finances or logistics or any other type of business. I think that trust is built through communication, and I see that you guys are very family-oriented type of business, very boutique, such as Pallet, as we are the same as well, and I really feel that you guys can add a lot of value to a lot of brands from the community and from outside the community.
Yes, we definitely believe in that, and like I said, first of all, we talk to all our customers before we even finance them, and also if the customer has problems and he's communicative with us, everything's going to be okay always. I mean, we've had situations where sellers got, God forbid, sick, and their business is collapsing, and we'll help them sell their business even, or find someone to take it over and keep working on it, or find an agency for him, or do whatever's needed to get the most out of the company.
How does anyone that's looking at, here in the room and anyone looking at home, when is the perfect timing for a company to take that decision and bring in a partner for, scale their business? When do you think it's the perfect timing to do so?
So first, I believe you should always have it ready in the back of your mind, because going through the process is non-committing. I mean, even if you submit a PO, you get approved, you sign on it, and then the payment, it's time to pay the manufacturer, and you have enough money in your bank account, you don't need us, no problem. You just say, I don't want it anymore,
sure,
and it gets canceled. We don't charge any setup fees, there's nothing like that. So just to apply with us is basically getting also an audit, it's getting an approval on how you're managing.
There's no cost at all if they apply.
Nothing. And then just the fact that we approved you is giving you a stamp that you're doing something right, that you're running your business right. If we don't approve or there's problems, you'll get that feedback from us that your advertising too high, or your sales cost is too low, or things like this. You'll get the feedback in that process from us, so I believe you should always have it. And also, working on in e-commerce, everything's so dynamic. So one day you have a plan and you believe you have enough money and there's no problem, and then suddenly you have a peak of sales because some TikTok guy sent a viral video, and now you don't have enough money to buy more inventory, and it's too late. So having us in your back,
I mean, if
in
you
your
guys do it in
backhand,
48 hours, that's...
yeah, but we don't want to do it in 48 hours. You want to basically always have that in place, because also you know what they say about financing. When you need it, no one gives it to you, and when you don't need it, there's a lot of it. So take it, or don't take it, but at least apply for it, have it ready.
And can you be pre-approved? I mean, let's say I go there, I get an approval for a PO, but at the end of the day I say, hey, you know what, I'm not gonna do it on this one, I'm maybe doing it on next one. Do I need to apply again, or I'm pre-approved and that's gonna expedite the whole process?
No, you still have to apply for every PO, because the product might change and obviously the data changes, but the process is much faster, because once you're familiar with our process and what documents are needed and how we work. And two, we have a more sales history and more data with you. So the second time and third time, like I said, is a much faster process.
Fantastic.
So you should always do the first one, at least see how we work, go through the process, take the money, don't take the money, it doesn't matter, but at least get familiar with it. And also another very important thing that I mention all the time when you asked about when is the right time. There are so many businesses even that would come to me and say, no, we have money, we're growing, you know, no problem. But as an entrepreneur who has started probably over 15, 20 businesses, some failed, some succeeded, you never want to have all your eggs in one basket. And so many entrepreneurs start an Amazon business, they keep reinvesting in their business, they don't take a salary, they don't buy a house, they take loans from their family to buy more inventory, and hopefully everything goes well, but unfortunately the statistics are that not everything goes well. And when something fails and you end up losing everything you put your entire life in, that's not risk management. As an entrepreneur also, one of the most important things we have to manage is risk. And when you take a partner like us, you're basically splitting the risk. You know, at the end of the day, doesn't matter if we charge 10%, 7%, whatever in the partnership, you're getting insurance and you're getting an investor. So when something goes wrong, one, we're gonna help you get out of it, and two, if we didn't get out of it, we lost 70% of that money and you only lost 30%. I encourage sellers to use our financing and take the money home, get a salary, buy a house, and use our financing. It's small percentages, but it's also risk management.
Sure. And I got a question to you, and this might be odd for you, you know, get into, you know, one of the sellers, they come and obviously you evaluate the velocity of the stock that they're getting. Usually you try to, have you seen overstocking or actually entrepreneurs buying less than what they need? Would you guys also help them through that process in saying, hey, I'm going to get 3,000 units, but you guys see the data and say, hey, you should get 10,000. Or the other way around, you're getting 20,000 and hey, dude, you only need 6,000. Do you guys also help them with that forecasting?
Yes, that helps. That happens quite a bit, and it happens to both ways. Like you said, we've had situations where a seller would come and he was growing. He did 500, 1,000, 2,000, and he said, I'm going to buy now 50,000 because I'm going to grow to 5,000, 6,000 a month. But when we look at the category, the whole category sells 4,000. So you're not going to get the 5,000. You'll maybe get the 3,000, and don't do it. And on the other hand, if the category can't support it and he really believes in himself, that's fine. We'll still finance it, but we'll finance what we believe in. So we'll finance 50% and not 70%.
Okay.
So it's still giving him the financing he needs. He doesn't have to bring all the money for that growth, and he can still bring that extra inventory.
Do you guys provide any products other than stock financing? I mean, like a cash flow or anything like that, or strictly goes oriented to products that you're buying? Obviously, you've said that a couple times, but just wanted to make sure, do you have any other products in terms of financing?
No, we're very dedicated to financing inventory, and I believe that that's, at the end of the day, that's 80-90% of most of the capital that
Sure.
e-com sellers need. So if you're financing all your inventory with us, that frees up capital to do new products, to do marketing, to go to new categories, because if you freed up 70% of your capital, you should have enough for a salary and growth and business development.
Yeah, otherwise it's not a business. I mean, you need that cash flow also within the business to pay your salary and grow the fundamentals of the business other than, you know, acquiring assets, which is fantastic.
Yes.
Question for you. Nightmare stories. I mean, we want to go deep and obviously our community, they want to get the most of it in terms of do's and don'ts. So what's the worst that you've seen in terms of a commodity, or the worst situation that you guys have gotten, and the best situation that you guys help a brand, obviously don't mention the brand, but just seen X amount of growth? I mean, what's both ways that you've seen it on this industry?
Well, on the bad side, I said a couple examples of, you know, hijackers, listing gets closed, stores get closed, things like that. On the good side, taking our experience, I mean, we've had, because we check everything, like the inspection, where the product is, all these things. So we had a pretty big seller. He buys about $1 million of inventory a year, sells around $3 million. And we saw that his inspection was in a different address than the factory that we checked the factory to.
Wow.
And we told him this. He said that, we told him, look, it passed inspection, we're financing it, but you should check it out. You're probably working with a trader and not the factory direct. It turns out he was working with a trader for over 3 years.
Oh my
God. We got to the factory and lowered his cost of goods by 30%.
No way.
The next year he bought with us over $2 million in inventory at 30% less. So he ended up making a lot of money off that.
His finance was free, basically.
Much more than free, yeah. I mean, and since then he's grown from $3 million to over $15 million in less than 3 years. So he's a very good success story. We have many of these that have grown with us, and so I think those are some of the good examples.
That's fantastic.
Yeah.
Can you mention how many companies have you helped during this whole process? Hundreds, thousands?
It's in the hundreds, yeah, high hundreds.
Wow, that's amazing. That's amazing. Well, I don't know if you guys know, but Nadav is also, as he said, a serial entrepreneur. He also founded a 3PL company. Would you encourage sellers using 3PLs, and what do you think about e-sellers using a 3PL instead of doing an operation themselves? Does that add value to their companies?
Oh, of course. I very much believe in 3PLs. I mean, even I went through many business market researches and checks. I mean, if you're not over 50,000 square feet, I wouldn't consider having your own facility. You know, having a 3PL is exactly just like my prior industry, cloud computing, and also the whole co-working space. It's dynamic, you know. A 3PL, you have seasonality. When you're managing your own facility, you have to have full-time employees all year long. Your cost is always monthly, where in a 3PL, you're basically paying for what you use, or paying for, so it's the best solutions for e-commerce, because e-commerce are so dynamic. They can grow, they can double and triple in a year, and then the facility you're in doesn't fit you. Now you got to move, you got to migrate, you got to find more employees. Who wants to deal with that headache when you're dealing in marketing and selling your product? I mean, I always believe when it comes to e-commerce, so many people, I mean, basically we start as a one-man show, and then we start bringing some help. But at the end of the day, you can't be Superman. You can't be the best marketer, the best logistics, the best finance, the best everything. So connect with strong partners that are the best at what they do, and that will give you the infrastructure you need so you can deal with the product, and that's the fun of it, basically. I mean, as an entrepreneur, inventing new product, marketing it, creating the content, and seeing it sell, that's where you want to be. You don't want to deal with your employee in the warehouse that fell over a box and now he has a broken leg, and you can't deal with your product.
Yeah,
you
counting products, adding labels, or not adding the real value that your actual company, your baby, actually, it's coming to the world to provide value to consumers, not that aspect of the business that partners like us, can add that value.
And in general, I believe in I started my 3PL also because back then, I mean, we needed it also. Amazon had the limits and all that, so you had to work with 3PLs. But when you have a 3PL, you also have a partner that you can work with and do things. So if you're selling on multiple marketplaces, you can ship from one location. If you have a problem with your product, you can relabel it, you can open it, you can check it,
Kids, so many bundles, this type of added value services.
Once it's in Amazon, it's basically dead. Now, I've seen situations here, you were talking about a bad thing. We had a seller, really big one, sells $250,000 of a specific product a month, and then he decided to add a variation instead of red, blue, and he sent in his inventory, and turns out they did it wrong. He didn't do inspection. The blue went into red, the red into blue. Within 3 weeks, within a week of sales, he got so many returns, the listing got shut down, and 250,000 monthly business basically became zero and had to start all over again. And he had to pull out product and relabel it, and simple little things that people don't always think about, but we've learned the hard way also from seeing others and ourselves.
One of the last questions, smart growth or fast growth? I mean, what would you say it's more important for a company? Is to grow fast? Because obviously in this business, you need to keep growing, or you either grow or die, that's what they say. Or just taking one step at a time, being more vigilant and growing smarter. Is it a mix of both? I mean, what would you say that's important for companies right now?
I think it's a mix of both. You have to have your plan and where you want to get to. If you're looking to be a one-man show and have a 7-figure business that gives you a nice income, that's fine, that's a plan. If you plan on becoming an 8-figure business or selling your business in the future, growth is most important. You want to try and grow as fast as possible. And also, in this industry, you have to grow strong and you have to invest a lot, and therefore, I don't believe that when you're growing, profit is not that important. I mean, if I'm a 7-figure seller and I manage to save a couple percentages because I didn't take financing, or I did some better logistic costs that cost me somewhere else, then I saved a few $1,000s. But if I'm going to grow into an 8-figure business and then I saved the few percentages, that's when it matters. So while you're still growing, if you're small, hopefully you have the cash flow and ability to do that. Really get as much volume and as much real estate on Amazon, because once you have volume in real estate, you're strong, and when you're strong, then you can work on improving your costs and your profitability.
Amazing. Oh, by the way, I forgot to ask, do you guys work with hazmat material as well?
Yeah, if it's stored and can be sold on Amazon or Shopify or whatever, yeah.
Awesome. So anyway, thank you so much, Nadav, for sharing this vital information for companies that they want to scale, that they want to grow, they want to partner up. You're not alone. So I mean, there's so many opportunities out there, and one of the things that we're very proud here at Palletize is it's about doing these Wednesday e-sessions, trying to have the opportunity to network with brilliant people like Nadav and a lot of people that we have here, and get that experience from actually the protagonists in the stories. I think it's very important to go out of your house and take that moment to network and bring that value to your own community. Here at Palletize, we want to support you. That's why we bring these kind of partners that can add value to you, to your business, to your whole growth, and super excited to have you here. Thank you so much for being a part of this, and looking forward to seeing you here in the future.
Thank you, Max. It was great being here, and it was really a great session, and so wonderful that everybody comes here live. It's very different than just sitting in front of the computer and doing a webinar, and it's fun to see reactions. And I hope we can help anyone that's interested. Can come to our website, do an application, Capec.io, and like I said, no commitment. You'll get feedback. It's almost like a free audit. And hopefully we can help you bring more inventory and grow your business together.
Amazing. So thank you guys so much for being a part of here. We're gonna have a Q&A, some questions here, but we're gonna be leaving you here at the channel. Thank you again so much. I hope to see you soon on our Wednesday e-sessions, the last Wednesday of every month here in Miami, Doral, Florida. And Palletize, we're a solution for e-commerce businesses that need fulfillment, inventory management, kitting, and product bundling. Anything that you guys need, we're a family for you guys, and thank you so much for being a part of this. Thank you. Thank you. I think we had a question, Sol. Yeah, you got it? We got it? Okay, that's fantastic. So, I don't know if you guys have any other questions?
Yep.
Yeah? Thank you.
What is your opinion about the new tariff?
Nice.
You need to talk about this. And the change, recommendation change on the future, you know?
I'm gonna say it in English here, so in the microphone. So they're asking about the tariffs and how is that gonna affect the whole industry, and what do you think it holds for the future for e-sellers if this continues like this?
Well, obviously, it's what's happening right now is stopping everything from moving, and we see this and we support our sellers. And the fact that they use our financing also helped them because they didn't commit to anything. Right now, many of our sellers, including myself, have containers in China waiting to see what's going to happen. We don't pay for them. They sit there and the financing doesn't start, so there's no fees or nothing, but it's still there. As soon as things will free up, we'll be able to help them continue. Obviously, in these situations, we also are using bonded warehouses and other things that you can at least get the inventory close, so it's already close to the US when things change. I think the biggest problem is that the uncertainty of what's going to happen. I mean, everybody knows that it's not going to stay 140%. It's going to change, and that's why we don't want to be the ones bringing in inventory at 140%, and then next month people are going to buy it at 50%. So it's everyone has to ride it out. Obviously, in a month or two, we're going to see problems in stocking in many places in the country because they're going to run out. I think that in this situation, we need to raise prices already now because you also need to test your market to see how it's able to work with these new costs and tariffs, and then also understand exactly your tariffs because there are many parts in your product that maybe can have less tariffs. Like if your product is created from multiple parts, you only have to pay tariffs on the actual parts and not on the labor putting them together. Things like that you can really learn. The whole tariff issue is there's a lot of content out there, I think, also on our website, so you can also look in there. But yeah.
This brought me a question right away. Have you guys done any financing in other marketplaces outside the US?
Yes.
Canada, Mexico, or South America, maybe Mercado Libre?
So we finance today all of Europe and the US. We don't finance yet Canada or Americas, only
Europe and
North
the
America.
US.
Yeah, exactly.
Amazing. All right.
So any country in Europe and the US, those are.
So I mean, if God forbid, I mean, you need to move one of those inventories that you guys have to Europe, you could definitely help them out there. And
of course, we have multiple connections to set up the VAT, whatever's needed, even free zone warehouses in Holland and places like that are easy to get the inventory in and start selling in Europe. Obviously, it's not that trivial because you do need, sometimes you need to change the packaging, you need different instructions. It's not that 100% you can just take the US product and move it to Europe.
Sure.
Also, they have different standards.
Yeah,
but
regulations.
Exactly.
Yeah, it's a different market.
But our sellers, when they're stuck, we want them to come and talk to us, and we go through the same situation. And luckily, we hear it from hundreds of sellers, so we're able to bring that data and share it with everyone, and hopefully help everyone get out of the situation. And of course, when needed, I send in inventory so I don't run out to have something, but just smaller batches, things like that.
What about other marketplaces such as Wayfair or Overstock or any other furniture, this type of thing? Have you guys done any financing for sellers on Wayfair that they don't sell on Amazon?
No, so at the moment we're only financing Amazon, Shopify, and Walmart stores. Once we grow more, we'll probably go into more marketplaces.
Amazing. They have a question here.
Yeah, I have a question. Do you think that sellers, regarding the tariff situation, would you advise sellers to start considering moving their productions from China? Or is it too early to say whether they need to wait or start exploring India, Thailand, depending on the type of brands? Because we've been hearing a lot of people asking and considering this as an option, but it becomes very expensive only to make that change. So what will be your take on, would you advise to wait? Would you advise to start exploring seriously those type of changes for sellers?
So, of course, like I said, I have 4 brands of my own. All of them are made in China, so I'm very familiar with this, but I'm not going to make any change at this point because we know that things are not stable yet. We don't know what's going to happen. Obviously, looking into other industries and other countries and other places to manufacture is something that I would start looking at. I wouldn't do any change before I know what's going to be the bottom line.
Sure.
But I think that just like so many Amazon sellers are also looking to expand to other marketplaces because you don't want to be stuck, you don't want to have everything from one marketplace. Same thing on your manufacturing. If you can, find other countries, other manufacturers, so you have failovers and other capabilities in the future.
Of course, of course. You guys have any other questions by any chance? I wanted to ask a question like if I was from the audience as well.
Okay.
And this is obviously a subject that's on the air and it's huge. AI. How do you think AI is going to affect in any way the operations that we currently have on as an e-seller? Is it any way going to improve experiences or improve your marketing process? I mean, is there any way that you see, or in logistics maybe, is there any aspect that you think AI is going to be more applicable to e-commerce or commerce in general?
I think AI is going to be everywhere in e-commerce, and I think already there isn't a single seller that doesn't use AI in some way, and there isn't any software or product or service that isn't adding AI into its infrastructure. And obviously this is something that's gonna make things move even faster and easier. So on the one hand, sellers can do more using AI and implementing AI with having less management of people and less softwares maybe, which on the other hand also opens up more competition, because as soon as things become easier to do, more people do them. Exactly. But so AI is a huge change, and every day I learn new things in AI myself. But yeah, just supporting it, learning about it, implementing it wherever possible. It's always
yeah. At the end of the day, we have to encourage it because it's going to be. It's already a part of the ecosystem, and you cannot swing against the
exactly
the current.
Either you're with everyone or you fall behind.
Yeah.
Yep.
So, well, again, thank you so much, guys. Really appreciate you being here. Let's grab a couple drinks and let's close it here.
Sounds great. Yeah. Thank you.